In this kind of market environment, when you look at a stock or a part of the market that is actually not down, like many of the broader high beta stocks and many, if not most indices are significantly lower for the year, when you look at a stock that is showing us relative strength and also absolute strength, that's something we want to focus on and respect. Now, of course, we do have very strong trends, as we've been talking about now for weeks and weeks and frankly many months, in energy parts of the market, commodities, resources, and such things. But I want to look at today at a part of the market that might seem very boring to a lot of people, particularly after a 12-year stint of, chart chasing high beta tech stocks, and that period is now, for right now, taking a serious pause. Um, but let's have a look at something where one could still see some relative value, even if it's a bit boring. Remember, just like bad season define good fans in sports. Bear markets is where you or choppy markets. We're not technically bear markets in all the markets just yet, but those define a good investor as they can actually uh, uh, hold on to precious capital and then have a lot more capital to work with once the new bull market or a new bull market emerges. So let's have a look at a couple things, particularly one specific chart, and we're looking at consumer staples. Now, I know some of you guys are yawning already and saying, hey, this is boring, but hear me out. Again, the alternative to what a lot of people are still doing is still chart chasing. We're trying to buy dips and tech stocks that just simply don't work right now. They could work for a while. They could be strong bounces, no doubt. But until we have a change in the economic environment, those things are going to have a hard time to move higher on a sustainable basis for the right here right now. Maybe some sort of an immediate term of 6 to 12 months is entirely possible. So consumer staple stocks, as you can see in our market rover, are actually bullish trend. That they've been bullish trend now for some time, but from a year-to-date perspective, this ticker symbol XLP, which is again the sector ETF of the S&P 500 for consumer staples, is actually not down much. I think it's maybe down like 1.5% for the year, again compared to a lot of other things. Now, if you look at some of the constituents, I'll bring this up, guys, just quickly so you can see. And I'll read them out for you just if you want to look at this a bit closer yourself. But if you look at the constituents of the XLP ETF, again, consumer staple stocks, things that are not so cyclically exposed, things that we still need to use, things like Procter & Gamble, things like Pepsi, Costco, those kinds of things. Those are the kind of names, Coca-Cola, Altria, Philip Morris, Mondelez, Walmart, Estee Lauder, the kind of things that we need and are not so sensitive to price even in an inflation environment. And quite frankly, a lot of these companies can actually absorb price um, input price quite well because they can pass those costs on to the consumer, meaning they can maintain their margins pretty well because we are less price sensitive to seeing increasing price in, I don't know, shaving gel or toilet paper or whatever, that kind of stuff, right? So have a look at that. And again, I think the big picture takeaway here, again, the market rover is very clear telling us this is a bullish trend still in consumer staples, meaning again, this is the kind of thing that is not bearish, meaning, again, the relative view here is important. If one was long consumer staples versus being short the S&P, one would have a hell of an outperformance this year, right? Think about it this way. Again, there's a time to be really aggressive and bullish on growthy kind of names. This environment right now is not that. It's been a great time to be bullish. Energy and resources and all those kinds of stocks we've talked about now for months and months, but it's not the environment to try to be a hero and try to buy your latest tech stock from a trending perspective. We'll get back to that environment, I'm sure, at some point, but right now it's a bit better, in our view, to look at something like staples. A bit boring, yes, but the alternative is, getting chopped around the market. So hope it helps. See you again soon.